Hey everyone, thanks for joining. This is True North episode. I think it's called High Powered Digital Money. I forget the name, but it's super excited to be here. The rest of the crew is off in Abu Dhabi. We are all at home holding down the fort, doing data analysis for you while there's a lot going on in the market. So super excited to be here. Really excited to talk. We have a nice slide deck. We have got some really thoughtful topics to try to weather this mini bear market. Let's do the presentation from Tim, the quick 30 seconds, and then we'll take it back over here.
Ladies and gentlemen, what you're about to hear may be amazing, but it is not financial advice. It's for informational and...
Oh, Jeff's not here.
Purposes only. Back to you, Dan.
So, guys, what are we going to talk about today? High Powered Digital Money is the name of the episode. As of right now, I think there's been really, really big developments in the Bitcoin credit market. Obviously, the macro landscape is changing every week, it feels like. And then on top of that, we've got new Bitcoin treasury companies floundering, trying to catch their breath as their stocks are getting hammered because they have so many shares outstanding. So what do you guys think?
Sounds great. Let's get rolling.
Heck yeah.
Yeah, we'll jump right into the presentation. Let's
jump into the presentation.
No time to waste.
No time to waste. Let's just go into it. Let's see what happens.
All right. Guys, I first want to remind everyone that True North World's coming up. We have a discount code that is True North.
Hey Dan, can you go to full screen or slide mode?
Thank you, Sure. Brian. I get so excited whenever we get the presentation open. So True North, capital T North for Strategy World discount code. That is in Las Vegas this year. And the exact dates are, I think, Tuesday, February 24th through, do you guys know the exact dates? I think it's through the 26th. So it's a 2 or 3 day conference. That's Strategy World. Our event is held before that, which you can sign up for here on this Luma link. Right now, there's already plenty of people subscribed and going, and we're really excited to have people show up and support and just talk after what has been kind of an eventful year, I think.
Yeah, last year was amazing. I loved hanging out with everybody, and it was such a close, personal experience.
Yeah, I think this year is what really separates the people that have the conviction, the people that don't. Last year in Orlando, the MSTR True North, I think we had about 150 people signed up for it, including the sponsors. So there was somewhere around 130 people that showed up. It was a great event. And then we went straight into Strategy World. With this, if you don't want to go to Strategy World because it's too expensive, then this is the event to go to because this is much less expensive. So the first 50 tickets are $210. And if you're driving distance to Vegas, this is the event to go to talk to people. And then you'll probably see a lot of other people out there for True North. For MSTR World. If you don't want to go to that, then you could, just have a nice few days and then head back home.
I think that's really the way to do it. Simply because, you get to see not only us, but I don't think we're really big play. Like there are people that come to this event to network, to talk to the other people that come to these events, right? So I think like we learn as much from you guys and the people who join us as they do from us. So I'm super excited. It's going to be more of a flat format, more conference layouts. It's going to be kind of structured after Bitcoin First in the way that it's more of an open discussion as opposed to a stage and sort of listening format. It's more interactive. So I think it's going to be really, really good this year.
And it's at the Wynn Hotel. I mean, it's a pretty nice place. So I would recommend showing up. Weather's kind of cool in Vegas and probably, relatively lower price than doing it at the high season. So look forward to seeing everybody there.
Awesome, guys. So today the agenda is we're going to go over the 2-year cycle, which is Grain's new theory. We get the macro. Are we in a structural bull market? Then we're going to talk about strategy mechanics, USD reserve, common MSTR, and some of the Pref specific metrics, because these things are really starting to build their own liquidity profiles, each and every single Pref. And they're very different, right? You look at the volume on Strike relative to MSTR, relative to Stride. It's all over the map. And I think it's only going to be an expanding landscape as people start trading these things all over the place. So, Grain, I'll let you take it from here.
Thanks. So, hey, I want to do a little bit of a, trend analysis. And this is not about, drawing lines on a chart. I don't. All the lines that are on the chart on the left-hand side are drawn by the chart itself. The red line and yellow lines there are just explaining to what we're talking about. So on the left chart, we have Bitcoin. It's a one-day chart. And you can tell by the upper left-hand corner, it says BTC USD, a plus signal, and then it says D. And so it's the D symbolizes it's a one-day chart. So each a candle's in the lower right-hand corner, and the candle shows you whether it's red or green. The difference in a candle is if the candle is green, that means from the open price and the close price, the price went up, therefore it's green. If it went down, the open was high and the close is lower. On the top and bottom, those are called wicks. So just think of it literally as a candle and figuratively, and the wick is that difference between the close and the high. So when you look at the chart on the left, if you go back to April 7th, 2025, which was this year, the 50-day and the 200 moving day average crossed over. That's the light blue line crosses over the yellow line. That's what we call as a death cross. And people are like, oh my God, that sounds horrible. Well, the opposite of a death cross is a golden cross, and that took place on May 22nd. So basically 5 weeks later, we were out of that death cross in a golden cross. But the interesting part is if you look down at the bottom, you could see you have RSI in the very bottom. And the RSI is the relative strength indicator. And that turned over and began to go back up. And the same thing with MACD right above it. Dan, you're real close in March. So now if we look where we are today, so we did have a death cross. And that death cross was on November 18th. And you could tell it was a death cross because the 50-day moving average in the upper left-hand corner is 109,653 and 110, a little bit over to the right, no, to the left-hand corner, left.
Sorry.
Right there. It's in yellow text. Keep on going.
Yellow text,
right
got it.
Yellow text. So because the blue number is lower than the yellow number, that means we entered into a death cross. Now you're like, oh my God, that's terrible. Death crosses sound terrible. And this is my 2-year theory. If you look what's happened on the bottom, it shows there that we're having higher lows. And the other part is the MACD and the RSI have both bottomed out, and those are both beginning to trend back up. So those indicators, because the 50-day moving average is over 50 days and MACD is over 12 days. So it's more responsive. That's the 12 and the 26. And the RSI is over 14 days. So it's a much shorter average. And these are the default settings. I don't change any of these settings. And so what it's showing you is that the market is recovering on Bitcoin. Now, this just assumes that, everything goes well. Does this make sense? Any questions on this?
Grant, I think it's a really, really good kind of technical overview of where we are. I know we sold off today after the FOMO-C. If we bottom here above, 85, that's still in keeping with a higher low. So,
yeah. And so this is how I look at it. So this is a daily chart. We go to the next one to a weekly chart. So you don't change any of the other metrics. Now on the weekly chart, you have higher lows and higher highs on the weekly. So we had this big sell-off after the past 4 or 5 weeks. And basically that light blue line now is the 50-week moving average and the 200-week moving average. And it dipped down very, very little. So this is showing the weekly chart. And again, this dip, while it is below the 50-week, you'd rather see that as a floor or a resistance where it doesn't go below that. Obviously, it dropped below it for a variety of reasons, which we've talked about on previous episodes. The whole Binance thing that happened, just to sell off the FUD around MSCI and so forth. So there's a lot of things that hit Bitcoin that caused it to drop. Now, if we go to the next one more chart, next one. Okay. So this becomes interesting, and this is where we talk about having conviction. So we can look at daily candles. We can look at 1-minute candles, 5-minute candles, 10-minute candles, whatever you want. You can look at any time frame you want from 1 minute, and this is up to yearly. So now we're looking at monthly and yearly. So if you look at the monthly chart on the left, the December is green. And what happens is, the month of November was horrible. It's like, oh my God, almost all of the dip happened in 1 month. And is it a big dip? Sure. Did we have a death cross on the daily? Yeah. But when you look at the shorter time frames, it's recovering. Now, if you look at it on the yearly chart, let me say, sorry, on the monthly, the MACD is still bearish and the RSI is hopeful and trying to trend up. But on the weekly and daily charts, those have already gone up because this is looking at each one in a monthly increment. On the yearly chart, I think this tells everything that's going on. And if you look what happened, 2022 was this red candle. It was terrible, right? The whole year was just red. It was miserable for a full year. And then you have 2023, it was green, and it almost retook what happened in 2023. What happened in January of 2024? Spot Bitcoin ETFs were approved, right? And then what happened later in the year, there was a red sweep and it changed the president and the administration, and everybody was looking forward to this mega year of 2025. So that's why you can see that 2024 is this huge green year for Bitcoin. If you look now in 2025, you have these two giant wicks. There's almost no body. So typically when in a candle, when the body is real big, right, versus the wicks, the little piece on the top, the body means that you have it's solid trend. When you have a big wick, that means it's indecision. I think that we've hit the bottom. I think that our cycles now are the 2-year cycle. And what's the 2-year cycle? By a strange coincidence, the halving happened to align up with U.S. presidential elections. I do not think it was by design. There's nobody that was controlling it. For whatever reason, it worked out that way. And so from that perspective, I think that the cycle, we had this 4-year cycle. I think now we're going to have a 2-year cycle around the midterms in the U.S. And we're going to talk about macro, why the U.S. is important. And so from this perspective, I think that every 2 years, you're going to have, 6 months bull cycle, 6 months sideways, or another 6 months sideways, which ends up being 2025. And then we go back into another bull cycle. If you're positive about 2026, then I think that when you look at the wick that you see on the right, I think it's going to be a positive year. Well, let's go to macro. Let's go to the key indicators on the next couple slides.
That was a great overview, Grant. I agree. Let's hop in here, Grant.
Yeah. So what was missing? So originally this group started out as MSTR True North. Now it's Bitcoin True North. So this slide was put out over here, the revised assumptions and corresponding results for 2025. What was missing from this slide was the over under. This slide said, what happens if Bitcoin's at 85,000 or 110,000? And what I wanted to calculate was, what's the price of Bitcoin have to be for strategy for the full year to have positive EPS, earnings per share? So that's at 97K. If Bitcoin's at 97K, the full year, meaning that the positive months of Q2 and Q3 will outweigh negative in Q4 and negative in Q1. So for the full year, EPS will be positive. Now, if Bitcoin's above 110K, Q4 is positive, and let's just say it's 111K, then you'd have $19 per share for the full year of EPS. So the over-under is 97,000. If we can all cross our fingers and buy Bitcoin, not giving any financial advice, not telling anybody to buy anything, but if Bitcoin's above 97,000, then strategy for the full year will have positive EPS numbers. And I think that's really great for the industry as a whole. I talked about the Santa Claus rally. Why is there a Santa Claus rally? Typically people do tax loss harvesting. They'll start in that in Thanksgiving. They'll be done with it by the second 2 weeks in December. In California, most major areas, I haven't verified this for all of California, property taxes are due today, December 10th. So if you needed to sell stocks to go pay your property taxes, you had to do that a couple days ago. So that selling is now over, right? Because you have to pay for your property taxes today. Some people have incorporated into their payments, but if you didn't, you had to pay your property taxes. So I think the year-end selling is done. And this is the so-called Santa Claus rally, which tends to happen quite frequently, about 75% of the time. So I'm bullish. Let's go to the next slide. I'll take any questions as you guys are going through this. So I did 2 surveys, and I love doing surveys because when people talk about something, you have qualitative responses. Is this person believable? Do you know how many followers do they have? Do they have no followers? Do they know what they're talking about? But a survey is quantitative. So I said basically, how many Bitcoin all-time highs will happen in 2026? Well, since the number is 16% saying none, that means 84% of the people say there'll be some form of all-time high of Bitcoin in 2026, right? And the amount of numbers of them is what you see there, because you can only have one high per day, right? If it retakes the all-time high multiple times in one day, you only count it once. So anyway, so that's the way that I look at it, that the people that are in this space think that Bitcoin will hit an all-time high in 2026, 84% of the people. The other part comes back is, and we're going to talk about macro in a few minutes, is it going to be a big all-time high? And that's when we talk about macro. So I asked the question. Lynn Alden is awesome. Everybody that's into Bitcoin should know about Lynn Alden. She's fantastic. And she wrote her macro newsletter. You could read it. It's free. And she basically said it's more gradual. Larry Lepard's awesome. He's a great guy. I've met him before. Really nice guy. He follows me. And he wrote the book, The Big Print. So basically, I did a survey and said, in 2026, Bitcoin, gold, and hard assets, is it going to be a gradual print, which Lynn Alden said, or is it going to be a big print? And basically, 44% of the people said it's a gradual print, had 163 votes. Big print for Larry was about 18%. In the middle, somewhere between those two ranges, was another 11%. And then 27% said both. And the timing matters. And what I think that means when we go through the macro, you'll see why I think some people say that. I think the year could start off slower and then go faster. What will cause it to go faster? Powell being replaced and confirmed in June. So it could start off slow and then it could go faster. You guys have any input on this? We're ready to go to the other sections, but any comments?
Yeah, I mean, I don't know if we're going to do 2-year cycles, 4-year cycles, whether a 4-year cycle was even like a legit thing or not, or a coincidence. But I think it's pretty certain that if volatility, should be increasing just with the way that they're going to have to print, whether it's gradual or big. And so, it could also be that people were assuming the 4-year cycle and then front running some exits. And so we got the bear sooner, and then we'll just get the next bull sooner. So this is totally plausible. Just the fact that Bitcoin can do whatever the hell it wants to do. And with, up and down volatility, we can also get more frequent volatility. There's no reason why we have to stick to 4-year cycles.
Great point, Soleil. I completely agree. And the ZERP environment was much different than the current interest rate environment we're in. That's something people need to remember. I'd argue if we didn't go, there wasn't this, infinite QE during 2020 and 2021, plus a push to ZERP, in a 5-month period of time, we wouldn't have seen a Bitcoin price expansion the way we did. And similarly, the correction wouldn't have been as significant.
Yeah, and some people were calling that the cycle was over last December, and whether they were right or wrong or accidentally right remains to be seen. But maybe we just diamond hands through the bear market already, and 2026 will be an up year. That'll be nice.
Yeah, I mean, the way I look at this, look, the Bitcoin, the spot Bitcoin ETFs will be out for 2 full years in January. I don't see how you could have 2.5 million Bitcoin inside the Bitcoin treasuries and the Bitcoin ETFs, right? I think that if both of those things didn't happen, Bitcoin treasuries and the spot Bitcoin ETFs being approved, I don't know if we would have had a lot of demand to really push higher than what happened in the last cycle. I think we would have hit like 100,000 and then we'd be trading at 40,000. But since the spot Bitcoin ETF got approved 2 years ago, been live for 2 years, and obviously Strategy has just acquired 660,000 Bitcoins on their own. And they seem to be buying about $1 billion per month, right? If they're going to add another 12 billion next year, I'm just making that number up, but it seems like it's totally plausible that they can add anywhere from $8 to $12 billion worth of Bitcoin next year. How many coins that equals depends upon the price. But I think
100%.
That's the part where I don't see how the price can stay low forever. Eventually, there's going to be a supply crunch. And I think we're going to see that play out. And so over here,
I agree.
yeah. So if you want to be with us, go ahead.
Here we're plugging our event again. If you guys missed the link, we don't make money on this. This is just to cover operational expenses. This is right before Strategy World. You can choose to either go to Strategy World and our event or just our event, it may be more applicable as there's less kind of BI component and it's more close knit. You'll be part of the discussion. Every single person that's there will be part of the discussion. It'll be a very flat format. So looking forward to that again. Now we're going to jump into the macro. So again, the format is we looked at the general kind of Bitcoin market technicals. We're going into the macro now, and we'll talk about the FOMC meeting. And then finally, we'll talk about strategy mechanics. So again, after the meeting today, the Fed meeting, we saw that the target rate was lowered 25 basis points. Again, it was almost expected going into the meeting. No surprises there. However, some of the dovish rhetoric was quite reassuring. So growth projections for real GDP were revised upward to a median of 2.3% from 1.9 in September. Unemployment job revisions were negative over the last 6 months, and the peak unemployment rate is expected in late 25 and an improvement into 26, citing an expectation of around a 4.3, 4.4% unemployment. Again, right now, this is kind of the stagflation narrative, which is really just the flow through of productivity from AI. That is a kind of a teetering labor market plus kind of sustained high inflation rates. PCE forecasts were lowered, right? So the general outlook is more favorable with a 2% target by 2027. Where they're getting this deflation, they're citing increased productivity, as Powell said, a result of computers being used more since COVID, which is kind of a nonsensical term in my opinion. Obviously, that's a lot of that deflation is going to be in the form of AI, and they believe that tariff inflation is in fact transitory and a one-time pass-through to the consumer. So it's a bunch of nonsense and gobbledygook all kind of mixed together, but they're essentially giving out dovish guidance into 26 and setting the stage, although there's only 2 expectations of rate cuts through 26 right now. I think with Hassett coming in, we'll talk more about that later, there could be significant lowering of the Fed funds rate over the next
real quick,
12 months.
Before you go to the next slide. So the one that I'm the most interested in here is inflation. And I did it on my channel. The title was Deflation is Coming, Inflation is Coming. And the reason why I say that is because there are going to be some insane advancements. Grains talked about AI and all of these things, and it's going to deliver tons of productivity, which is going to drive deflation. But Bitcoin mining is an infinite bid on lower energy prices, so those are coming down. We got frickin' Elon is going to build us a couple of billion robots. There's going to be like robot farms on Mars and shit. So there's just tons of innovations. We're going to be like making food with yeast fermentation. There's just going to be tons and tons of deflationary technologies, and the system has to hide it. It cannot allow deflation, or the inflation rate to go negative. So if we get 10 to 15%, deflation rates, they're going to have to print a metric ton of dollars in order to drive inflation to mask the deflation. So this 2%, I mean, everybody knows they cook the books. So there's just tons of money printing that has to happen in order to
Debasement,
this.
right? Debasement.
Exactly.
Yeah. M2 money supply continuing on its upward trajectory. That's a 7% CAGR since 1970. Don't forget it. I think it's one of the main driving factors between of kind of S&P growth and the fact that investing sometimes is more just financial protection. Labor market deterioration. Obviously, we don't have government data, and it's coming out next week. As Grain will go into a little bit more detail, government shutdown may occur January 30th, 2026. Grain, you want to quickly touch on that real quick?
Yeah, so we keep on getting these continuing resolutions. So they have to agree on a budget. If they don't agree on a budget, it just continues what's already in there. So we could have another government shutdown start after January 30th. They keep on assigning these stopgap spending bills, and people are like, oh, well, everything is fixed. No, it's not fixed. The other part, which we'll talk about, is a big, beautiful bill, which was signed off, allows the U.S. federal debt to go to $41 trillion. And we'll talk about that in a minute, but there could be another government shutdown as soon as, February of next year. And then we'll be back in the same space again, Dems and Republicans fighting over this, and there's nothing they have to sign off on this because they have to pay the bills. There's no way around it.
Exactly. Yeah. Employment sitting at 4.4% in September. Private data showed a sector-wide employment decline of 32,000, first negative month since spring of 2023. So jobs data looks weak. Again, jobless claims remain near 3-year lows, yet layoffs reached 1.17 million through November. So actual employment's declining, and the Act 60 mandates make it such that mass layoffs, which we'll see here, won't flow through into employment data until spring of 2026. So there is a real scenario in which the employment picture is even worse than expected. You can see across the Mag 7 companies and really software companies, 14,000 corporate roles cut explicitly due to AI process automation at Amazon. Intel, 22% of the workforce slashed because of AI. Salesforce, obviously having trouble in terms of their stock price. Really, it's something Visser says a lot. Code no longer has a moat. 4,000 roles slashed, and again, Accenture, multiple tranches of layoffs. K-shaped economy. We can see the Kobayashi letter. It's just the picture is very bleak for software and for so legacy software and for the average entry-level employee. Consumer credit surging. People are paying their debt with more debt. The K-shaped economy continues. It's a debt expansionary cycle. This is something we're seeing from the government all the way to the credit card consumer. You guys want to jump in here real quick?
Yeah, I mean, these numbers aren't looking good. And this is one of the things that you see with bad news means that two things. They have to print money because they can't tax more. The U.S. government has two choices. Congress has a choice. They could raise taxes. That's not going to happen, right? If they raise taxes, they'd be able to balance the budget, right? But nobody wants to raise taxes. You won't get reelected. Okay, you could cut spending. They tried doing that, and that's incredibly difficult. And the problem that we'll get to is the interest on the outstanding debt is the second. Let's go back for 1 second, then we'll go to the next slide. So that's the other problem. So the people that have asset holders, whether it's hard assets, Bitcoin, Mag 7 stocks falls into there. You want to say precious metals? Sure. It's basically a hard asset that you could also view it as anything that's growing faster than the debasement rate and the inflation rate. So if inflation is 3.5%, debasement 6.5%, if you're making 10% a year, you're breaking even based with the degradation of money. That's a term that I use. If you're making 20% a year on your returns of your investments, then you're really only making 10% a year, covering up the M2 printing and the inflation rate. So this is the K-shaped economy. The people that own assets, and the only way you can own assets is living way below your means, being cash flow positive, and then buying those assets. And that's what we've been on here talking about for 47 episodes. Let's go to the next slide.
Well, real quick, that slide is kind of the only one that really scares me because it looks like we're creating a credit bubble here. And it does make sense. Like when inflation is just growing, it's totally logical. And you don't even have to be like high time preference. You can be low time preference. It's just totally logical to borrow and pay it back with deflated dollars later. But it wouldn't make me feel so bad if people were buying Bitcoin on their credit cards, right? But if you're buying groceries on your credit cards and you're just getting poorer because you're not, you don't own Bitcoin, this just scares me for most people. I mean, I know everybody here is a Bitcoiner, but this just kind of reinforces why it's absolutely necessary.
It leads into this idea is the consumer going to stop spending when these credit levels hit like some sort of terminal rate? And what we've seen is that the consumer hasn't been weakening over time, even with increased debt balances. So I think it's going to end in some form of transfer payments if people want to get reelected, forgiveness of student loans, for 50-year mortgages, you name it. Like that's how I think the government the in power incumbents are going to continue to get reelected. Mag 7 tells the same story. Mag 7's entire market cap, so that being the top tech companies in the U.S., between 20 and 22 trillion. This is a quote from Grain of Salt, and I'll let him elaborate. If the U.S. didn't have the Mag 7, we would be Europe. says grain of salt. But look at these numbers, right? The portion of the total U.S. stock market that is the Mag 7, these 7 winners, which have generated the entirety of the investment returns over the past 10 years. And then that compared to the entire worldwide equity market, like there is a bubble in big tech, or it's not a bubble, it's a concentration of value.
Yeah. So I know that people are from Europe and they're watching this, and when I was in Europe and I was there with Dan, it was awesome. We went to Bitcoin Prague, and what we realized was when I was there, I was like, wow, the people are beautiful, the food was great, they're dressed great, and we stayed at nice downtown in Prague. It was absolutely beautiful city. And then Tad Smith was with us, and he basically made the comments like, it's not what it seems. And I'm like, what does that mean? And so basically, if Germany was a U.S. State, it would be 45th in the U.S. in per capita GDP. And I was like, oh my God, I did a whole pod on this talking about it. The top countries in Europe would end up being 45 and lower in the U.S. And most of them are below Mississippi. And so what happens is I was like, I knew this going back, and that was way back. What was that? September, October, we were there, Dan, in Prague. So then this got posted recently on the right-hand side. And I know that I'm taking a crack here at the EU, but the EU makes more from fining the US tech stocks than it does from taxing all of their public European tech companies. Think about that. I didn't make, and I ran this through Perplexity to verify, is this correct? And it came back that it verified that this is a correct statistic. So the fining, they fine these companies, and the fines are more than the taxes. I'm like, that's crazy. That's crazy.
Absolutely insanity.
Insanity.
Yeah.
And by the way, I live in the US. I'll crap on the US for a minute. If the US didn't have the Mag 7, if we didn't have it, we would be screwed. And that would reverberate through our economy, that we would not be the reserve currency. So the Mag 7s make up a third. It's $20 to $22 trillion. The US equity market cap's about 60. The worldwide equity is about 100 trillion. So if those were in different countries, the US would not be the superpower that it is, or maybe that's a dated term. And that's where we would be. So in the US, we have Silicon Valley. That's where I based my career on to start these companies. And for every company that makes it, there's more like 1,000 companies that fail miserably, right? And people work there for years. So that's why people come to Silicon Valley, for that shot, the 1 in 1,000 shot, that you work at the right company, you get there at the right time, you get enough shares, you don't get diluted, and then things are awesome. But that's this K-shaped economy that even exists here in Silicon Valley. Keep on going.
And we've talked about a little bit, continuing on this AI power projections for data centers. Don't want to get into this too much. You can see margin compression across hyperscalers is a real risk, CapEx reallocation, and regional economic divergence with the creation of data centers in these sort of, rural communities, all part of the AI story. And it makes it such that the investment picture for AI is very uncertain moving forward. I mean, I heard on a podcast today, you can't invest directly in electricity. You can't just go buy a bunch of electricity, but you can invest in data centers. But will it be in the right location? Will it be servicing the correct GPUs? Will the GPUs be retired or obsolete once, local devices and local models with more and more parameters, fewer and fewer parameters, and they're more efficient, can run locally on your device? Like, there are a lot of factors. So I think a monetary debasement hedge, a native internet currency, high-powered money, is a really solid sort of benchmark and protection mechanism moving forward. Now we'll get into the monetary policy side of things, and why both the AI, the deflationary force, is at odds with the actual incentives of politicians to continue moving government and monetary policy forward.
Yeah, so I was working with Dan on this slide. This is really important here for monetary policy. If you look in basically through about year 2000, there's a dotted line on the top, and that basically shows that the federal surplus or deficit was basically zero, and we had a surplus in right before 2000, probably due to the internet bubble, and Clinton was in office. And then since then, you could see that we've had a deficit during COVID of almost, negative $3 trillion in the lower right-hand corner of the top one, a little bit higher, right there in 2020. And that's where you had this negative. Now, the problem that's happened here is the federal government current expenditures and interest payments, that's not going away. And the reason why those interest payments are not going away is because of M2. And I think it's on the next slide. The problem is the U.S. debt that we have. And it's over here on the left-hand side. The total federal debt just continues to rise. So as of right now, there's $38 trillion in federal debt. And the interest payments on that's our number two expense. So people love to vilify Jerome Powell, the money printer. Jerome Powell, he's the Fed, and the Fed, and Congress. If you have a deficit and you've acquired $38 trillion in debt, Powell has to print, right? You have to print because you have to pay those interest payments. The problem here is the debt ceiling is allowed to go to 41 trillion. And Charlie Biello, he calculated this based upon the Treasury notes. Basically, we're up 2.2 trillion since July 3rd of this year.
Wow.
So when I had calculated this, I thought we'd go to June of 2027 on 41 trillion. But if 2.2 trillion basically in 6 months, if you multiply it by 2, we hit 41 trillion by September of next year, not 2027. That's the big print, right? So look, these are the numbers, and people vilify Jerome Powell all the time. The money printer go burr. The problem is that we don't collect enough in taxes to cover our expenditures. And our choice is either raise taxes or cut the expenditures. And neither of those are being done for whatever reasons you want to think of. So with that said is the only thing people want to know, does that printing flow into Bitcoin? And my view is, like I said, beginning, 84% of the people that follow me, based upon statistics, were saying that they think Bitcoin hits an all-time high next year. I think they're right. I think Bitcoin hits an all-time high next year. I don't think we go into an 18-month crypto winter. I think we're living the crypto winter right now, and I think it'll be over by December 31st. That's my view.
Yeah, this is just another reason why rates have to come down, because they can't pay the interest payments on these. It just has to go down.
Right. And they switched from long-term to short-term, and the refinancing. I mean, the numbers are absurd. I think it's in your next slide. It's absurd what they refinance weekly. And we'll see those numbers starting to show up next week. Powell talked about it.
Yep. Just a little bit of info on Kevin Hassett, who has an 74% chance on Polymarket that he'll be the next Fed chair nominee by Trump. And again, I agree with this is Besant's vision for Fed reform. I agree with his vision, mission creep, and institutional bloat threaten the central bank's independence. I look forward to the president deciding who's going to be the next Federal Reserve chair. And I think that he and Secretary Besant will do that ably. So, Kevin Hassett is a large proponent of digital assets, of Bitcoin, and of being Trump's right-hand man in taking interest rates lower, much, much lower, and even the long end of the curve via some sort of quantitative easing function. I mean, Trump made his money with cheap debt in the real estate markets. No reason he doesn't want that continued for all Americans or for all wealthy Americans. We saw new CFTC guidelines around using Bitcoin and Ethereum and USDC as collateral for customers. So prior to this new regulation, you couldn't use these sorts of collaterals to trade on derivatives exchanges in the US. Now you're able to post Bitcoin, Ethereum as USDC, and it's treated as sufficient collateral. So this is just another theme in what is really a whole series of positive developments across the board for, Bitcoin and USDC stablecoins as collateral, which is pretty much the largest unlock for these markets, right? Like if these are in fact digital assets, digital capital, durable, hard money, then they need to be treated as such. And so as these regulations start to come online, more and more capital will flow into these assets as the lending abilities and just financial services that are developing around them become more and more mature. So I think this, again, is just foundation for, a long-term favorable kind of Bitcoin environment.
This
Grant?
alleviates some sell pressure, right? Like people don't have to move off their Bitcoin stack.
Yeah, exactly. They don't have to move off their Bitcoin stack. The Bitcoin essentially becomes more of a settlement layer. Like the Bitcoin's worth something. If you can't use Bitcoin to back your derivatives trading, it's not worth anything.
Yeah.
Yeah. So let me chime in on here on something that changed from the old days till now. So originally, back in the old days, prior to Tether, you would post as collateral, Bitcoin or Ethereum, whatever, for what you're trading in. So what you used to have was these massive short squeezes that would go up, and it would be awesome. For freaking 4 days, I'd be Superman because the price would shoot up due to a short squeeze, right? And then you'd have long liquidations. And the reason why this happened is that if you post Bitcoin as collateral and the market goes up, you have more collateral because the price goes up and therefore your Bitcoin goes up, and you could take more leverage, right? More nominal leverage because your Bitcoin went up in price, right? So you have more equity. But it also worked in the flip side. All of a sudden, if the market was shifting goes down, now your Bitcoin has smaller and smaller equity value and you get more and more liquidated. So you see here, you have three different choices: Bitcoin, Ether, and USDC. What changed was about in 2021 and so forth was that many exchanges started accepting stablecoin as your collateral. And what happened is, because it's pegged basically at $1, as the price goes up, your collateral really doesn't go up along with it, right? It stays about the same. So I think that this is great new regulations. I think this is great for the industry that's being treated as collateral. We saw the same thing with banks being able to use Bitcoin as collateral also. So I think that this is good news for the industry.
I agree. I totally agree, Grain. All great points. Again, if anyone missed the links for our event or for Strategy World, please attend, talk to us, hang out with us, and hang out with each other. More importantly, a lot of high-profile people, or low-profile, high-important people come to these events, and I think you'll benefit more from who you meet there than meeting us per se. So now we're gonna pivot this convo directly into strategy. We're gonna focus on some of the mechanics, some of the prefs, and how all this macro plays into what we believe is to be an extremely exciting and relevant equity in the emerging kind of digital assets economy, the bank of the future, the financial services provider, really what can be the leader in digital credit over the next 10 years, let's say.
Yeah, I'm excited for this one because I had to run my mouth in the chats last week while you guys got all had all the fun talking about the reserve.
Yeah. I mean, the reserve is a big deal. And who's it for? It's for two sets of people, right? One, it's for the ratings agencies. And two, it's for the institutional investors who are trying to figure out how are they going to pay these dividends, right? Which we know they can just borrow money against their Bitcoin stack to pay the dividends. They can raise capital via ATM. They can raise capital via other preferreds. Grain, like, doesn't Apple use borrowed money to pay their dividends and their interest?
Yeah, it's with most of the Mag 7. They borrow money because it's cheaper for them to borrow money. They can keep the cash dividends on the cash in their account, borrow money, and they can use it to pay dividends and to buy back stock. So it's financial engineering. There's nothing wrong with it. They've been doing it for better part of 10, 15 years, and that's how this goes. So from my view, I think that this was awesome that Strategy did this, that they have this, they have a BTC reserve, and then they have the BTC reserve dwarfs the dividends, and then they obviously have $1.44 billion in dividends. I think we're missing that slide, but this slide just shows the BTC reserves. So I think this is awesome.
Exactly. I
Here
totally
it is.
agree.
Sorry, next slide. Yeah.
Next slide. Totally agree. 1.44 billion USD reserve. It's essentially, it answers people's questions as to how this is going to get paid. Not even, and then, so it's really interesting the term of events, right? This was raised via ATM 2 weeks ago. Last week, they raised a similar amount of just shy of $1 billion in MSTR common ATM used to buy Bitcoin. So the liquidity in their stock is still extremely, extremely high. It's used as a hedging mechanism for spot Bitcoin. as Tom Lee's touting. But for all those reasons, there isn't a real systemic problem, but we just know as the pressure coming online and as they were sold at a discount, unfortunately, the gravity was towards one mNAV, but the stock is extremely healthy, its liquidity profile, that being.
Right here. This is just an absolute flex. The perspective on this. So before they bought Bitcoin, it took Strategy 20 years to come up with $500 million. And the other week, they pressed the easy button and generated 1.44 billion in cash over a trading holiday. That's the power of permanent capital.
Absolutely. And albeit via dilution, but nevertheless, it would still, effective and accretive so long as that underlying digital capital is appreciating faster than the USD is decaying.
Yeah, and we'll get to it. But it is important that they did it now, I think, when it is above one mNAV, because now they don't have to resort to paying the preferred dividends if they go below one mNAV, because they've already generated the cash and they can just go ahead and pay the dividends with the cash that they generated above one mNAV. So it's just kind of like a no-brainer that they did. I mean, initially I hated it. I'm like, okay, melting ice cube, you're never supposed to hold cash. But it solved so many problems. It solved this problem. It solved the problem of, the rating agencies telling them that they can't generate cash. It's like, okay, the rating agencies were like, I double dog dare you to generate some cash. And the strategy was like, okay, be right back, hold my Bitcoin. They just immediately just materialized it out of thin air. So they can just, they demonstrate that they can get cash anytime they want.
Yeah, I wanted to chime in. Alec made a comment in the comment section that when a traditional company, and Saylor has talked about this many times, when they buy back the shares, that's surrendering the capital back to the shareholders. And this is the part about financial engineering that as soon as you say this back to somebody, they think they're sharp, and you say, well, wait a second, a company's got 60, 80, $100 billion in cash. And what they're going to do is they're going to buy back their own shares. Now, why do they do that? Immediately, it's accretive. Why is it accretive? It reduces the flow to shares. Oh my God, that sounds like Bitcoin. We have a fixed supply, and what they're trying to do with your typical Mag 7 company is let's buy back shares. And what they're trying to do is constrict that supply in order to force the price to go up. Oh my God, that's exactly what we keep on saying with Bitcoin. Let's buy Bitcoin, put it into long-term holders that are not going to trade it. Therefore, the effective supply is smaller. The trading supply is smaller. Therefore, the price goes up. Now, the interesting part about buying back your own shares, it's immediately accretive because it reduces the shares outstanding, right? And so what happens with this is that they're okay with this, but the fact that strategy is not sitting on that cash, sitting there waiting to do this, right? And they're not borrowing money to do it. As soon as you say it to a really smart person, oh, well, they borrowed money to buy back their own shares, and that cash is not being used to buy other businesses. It's not being used to invent new technologies or hire new people. We just saw they're getting rid of people. So it sounds like to me that the typical Mag 7 does a lot of financial engineering, and people are okay with it. I'm okay with it. But with Bitcoin, it shows a Bitcoin treasury company that they acquired cash. I think this was a great idea. And it helps them to feel great. They put this up on the website, how many months they have of dividends. Saylor retweeted a Fong interview that happened today. And, so if Bitcoin was to drop down to 50%, 50% where it is today, they would be able to pay the dividends until 2060. 2060. If it stayed this flat, they could pay the dividends to 2100 the year. And then if Bitcoin goes up by 1.5%, they could pay it, in perpetuity. And people be like, well, these are perpetual, but it should be forever. As soon as you say to that person, whoever they are, well, tell me, how long can a company pay their bonds? Do they ever tell you that they could pay their bonds for how many years in the future? No, they don't. And that's the part where people will call out strategy all the time. And you have these old analysts on there. And it's like, give me another company. And they tell you how much coverage do they have. You have it right there. This was the one I was talking about. They have 21 months of dividend coverage right now. And it took them 1 day to raise. It took them 3-4 days to raise it.
Exactly. No, Green, you're totally right.
For
The
1 year's
transparency,
worth of dividends.
the
Sorry.
transparency is off the charts. Exactly. It's insane.
Right. Wait a second. They raised 21 months of dividends, and they did that in I think they did it in 5 or 7 days. So
It
for
was in one
all,
trading week. Yeah.
yeah, one trading week and 21 months is a shade over 630 days. Wow. I think that's pretty freaking amazing. I
It's
mean,
amazing. It's absolutely amazing. And then, you can see the 10Q here showing the exact capital raise, $928 million, just shy of $1 billion. You can see the Stride stock ATM was used as well. So this is just a massive development. Stride has been seeing some incredible volume or increases in volume, and we'll go over that in a little bit. Obviously, this is a Strategy's capital structure. So for anyone that's not familiar, this is sort of a size-weighted construction of all their different products that sit senior in the capital stack. So right now, this represents about 30% of their total Bitcoin assets. The liquidation preference and the outstanding liabilities cover, again, about 27% of their total asset base. That is Bitcoin. And you can see these are the converts in blue and the prefs in red: Strife, Stretch, Stream, Strike, STRD, Stride, and Stretch is by far the largest, and that will continue moving forward. So again, that's the capital structure, very kind of even between prefs and converts, and these converts will roll off. Fingers crossed, they do so in an accretive manner with the price of Bitcoin and MSTR going up, and then we'll see the prefs kind of dominate the capital structure as they're never have to be refinanced, and they don't carry term risk that could in fact reduce Bitcoin per share in the short term. More so on Stride. This is just a total analysis of Stride specifically. On other weeks, we'll go over different prefs. But the trading volume's up significantly. This is just a snapshot from the other day. You can see its trading volume was about double its average. Here's the volume on these little candlesticks below the price. So someone bought these extremely high dividend, effective dividend rates, right? Stride was trading about 65. Your effective dividend rate was over 15%. Someone was very excited and was an avid purchaser there. That, coupled with the cash reserve, means these dividends will get paid. Everything barring some sort of complete collapse in the price of Bitcoin. So the volume starting to reflect that in this high yield, kind of non-cumulative preferred equity. That's all we have for the presentation. I'm going to close it down, and I think we're just going to talk a little bit more before we sign off here for the evening.
Yeah, I quickly took I guess we can pivot real quick. So Strategy did leave a rebuttal for the MSCI FUD, I guess, about maybe getting excluded. And so I'll just run through and summarize it real quick. They basically said that digital asset treasuries are operating companies. They're not investment funds and should not be treated that way. The 50% rule is arbitrary and discriminatory. They don't do it for oil companies, gold miners, etc. Also, it would be basically very hard to manage. In IT, we always hated putting anything in because now we had to maintain it. And they would just have to, MSCI would have to monitor volatility, accounting changes, all kinds of, different things. They said that it injects subjective policy judgments into the indexing. MSCI is supposed to be neutral, and this, clearly, kind of screams favoritism. And then the last point is that it contradicts the U.S. policy and stifles innovation. Basically the administration is moving in the complete opposite direction. So it's kind of like, look, get on board with where the economy is going.
I'm in agreement.
Yeah. Look, for MSCI to say this, this is the type of thing where you work at a company, and then let's say this did happen. You look forward to that, you look through to this, and then you see what happens years later, and you're like, wow. And why would I say something like that? Why do people change their minds? Sometimes they just get rid of the CEO. I think the best example of this is Vanguard. Vanguard said they would never allow spot Bitcoin ETFs to be at Vanguard. And there was the videos, those were all circulating last week because they changed their mind. Now, did the CEO change his mind? No, they got a new CEO. That's what happened, right? It's like, did the company change their mind? Yeah, because they got a new CEO. What I can tell you is you don't want to. Do I think CEOs make mistakes? Sure. Do I think that sometimes CEOs will double down on the wrong thing? Yeah, that happens all the time. But at some point, you have to determine, is what you're doing in the best interest of your company or your policy or where the future's going. Somebody tells me that they don't see a robot. I see them. I've been talking about this for a year. Waymos, driverless. It's 250,000 rides per month in San Francisco. Nobody driving it. It is a robot car, right? Now, if somebody lives where they've never seen that, they have no idea what I'm talking about, right? But this has been going on for 2.5 years now. It's not like this started yesterday. 250,000 rides per month. And I want to tell you guys, the guys driving the Ubers and the Lyfts, they're pissed off. They're like, hey, I came here in America. Now they would get rid of me in a second for a self-driving car. So what am I saying about this? Is that, the plan works until you realize that the world changed. And if you just don't see it, the world changed, you're a dinosaur or a Luddite. And so I don't want to, call out MSCI, but they're not thinking about how the world changed. Why should we buy sovereign bonds? Nobody wanted. I am unaware of a gold treasury company. I guess maybe a gold, right? But all of a sudden, right? They didn't buy it, but for Bitcoin, it makes sense, right? And so from that perspective, it was like, wow. I think that's the key takeaway. The world changed.
Absolutely agree. I mean,
Yeah,
I think
for
that's
sure.
pretty much the outlook. Like people, I think, are a little over-indexed on fear here with regards to Bitcoin. It's hard to imagine it ever going up again. I do feel that as well. I get it. But if anyone remembers the deep bear of 2022 and 2023, I mean, it was essentially a 2-year period of time where you just sat there and be like, yep, I guess this thing's just never going to go up. And but if you're a good disciplined investor, you just sat on your hands because you believed in the thesis, and then you were rewarded by a triple in 6 months, right? And so like that's kind of how, fortunately or unfortunately, this asset behaves. And you may just have to sit on your hands for another 3 months and watch it triple over a 6-month time frame, and that's how you got to hold this thing.
Yeah, and those USD reserves, I know it seems like an arbitrary, like, oh, okay, 21 months for the memes, but that's not an accident, because that basically spans probably the longest bear market that Bitcoin has ever had. So, the USD reserve is enough, had to been tailored to span any kind of like extended bear market that they could foresee in the future.
Yeah, the 2-year cycle. Exactly.
Yeah, and I think this now becomes a conversation ploy when they go talk when Saylor or Fong or Andrew go and they go talk to large institutional investors, and they're like, you only have $1.44 billion in cash. They could just say, okay, if we increase it to 2 billion, 2.25 or 2.5 billion, how much of our prefs will you buy? Right?
Yeah.
It's a conversation
Yeah.
starter. They just go
Yeah.
out there and they just say, we've got 1 point. Great. Are you going to buy $1 billion of our prefs if we increase this? Okay, then we'll go do it, because they know that leads to that adoption. Will you buy 2 billion? And I think that's the part where they've opened this up to hold cash on the balance sheet. And this gives them that optionality. I think this was a big change that happened. I think Stretch was, and we'll see how this plays out. I'm bullish for next year. I believe that the Santa Claus rally has already started, and I think that we will find out the news tomorrow on Thursday. We'll see if the Fed starts buying tomorrow.
Yeah, Grain, you're exactly right on that point about, hey, how much are you going to buy? Because they already know that the ratings agency, if they get a bump there, that's going to expose them to to more of the money. And it just reminds me a little bit of, I saw a Jeff Booth interview last week, and he had actually just spoken with Bukele. And he asked him about, hey, why did you take this money from the IMF? Because that made a lot of Bitcoiners mad. Like, hey, you're cooperating. And Bukele's thing, he said, look, I wanted the cheese. Like, I know it's a mousetrap. He's like, but I had to get my hands on the cheese. And he said, as long as my citizens are, stacking sats and self-custodying their Bitcoin, he's like, I know nothing else matters. And so I think that's kind of the same situation that Strategy's in right now. It's like they want the cheese, right? They want people to buy more of these prefs, but they have to like jump through this hoop for the ratings agencies. They got to jump through these hoops for the, to get into the indexes. And as long as they stay Bitcoin focused, they can get the cheese, and then, Bitcoin just imposes its will on the world, and, they end up being the winners in the long run.
Totally agree. Should we do final thoughts here, guys?
Absolutely.
Awesome. Green, you want to go first?
Sure. Look, the U.S. federal debt, it's not going away. In fact, based upon the numbers we showed you today, it's growing faster than the projections. If it grows at $2 trillion every 6 months, we will hit the federal debt limit right around election time. And they will have to, they thought that number would be 6 months after the elections. And if that happens, right, because they're printing too fast, then that will become a problem. So the new guy that comes in will have to lower interest rates to slow it down, because that's the expense that goes out to pay the monthly interest expense. So they got to lower interest rates. Nothing is going to change that. The only thing that's going to happen is whether this is gradual or it's gradual then sudden. And that's the difference between the gradual Lynn Alden and the big print Larry. I think it starts off slow and then it's going to run away. And I think you're going to end up with two types of people in the world. People that bet on Bitcoin strategy, a couple other Bitcoin treasury companies that rocket up in value, and that bet on AI and the Mag 7 stocks. Those people will look towards everything and be like, oh, this was bound to happen. I had to protect myself. There'll be other people that saw this, but just didn't have the money to do it. And that's horrifying. That's really terrible. But my takeaway is, if you know this is happening, you could do the best you can to prepare yourself. And for those people, that's why we do these spaces, because I want everybody to have a bright future. But if you don't know what's going on, it's really difficult to do that. So that's my takeaway. Not, quote Lynn Alden, nothing stops this train, and they're going to print. And either you're going to have Bitcoin or AI related. If a robot's going to take your job, you better have Bitcoin to make up for it.
Absolutely. I think that's well said, Grant. Soleil?
Yeah, so I guess I want to talk to the 1x mNAV bears real quick. And, they'll say strategy's trending towards 1x mNAV. And I'm like, yeah, no shit. Like, every company is trending towards 1x mNAV. And that includes all the companies that don't have any Bitcoin. So they're going to zero. The only companies that will exist in 50 years are companies that have gotten rid of their cash treasuries and are on a Bitcoin standard. So what's the game then at that point? If we take a time machine into the future, you have to have Bitcoin. So the only thing that matters is getting as much of it as you possibly can. So, there's a small variable attached to that, which, if you've got positive cash flow, it's going to be 1x mNAV plus positive cash flow. But just like anybody who, puts 5% or 10% of their portfolio into Bitcoin, a cycle later, it's 20% or 50% or whatever, and just by no fault of your own. And the same thing is going to happen to these Bitcoin treasury companies. Every single company that starts stacking sats is going to realize that the Bitcoin is going to grow faster than their positive cash flow. So get all the cheese you can. That's just basically the end game.
I totally agree. I think well said. I mean, obviously price action is underwhelming at times, but it's important to remember that, this is more than a macro asset. It's a technological innovation when it comes to money. You've got the PayPal founder working on Lightspark, different lightning payment applications. Stable coins are absolutely exploding in third world markets and emerging markets. And then you have this new digital credit industry, kind of moving and bringing broader adoption into the commodity that is Bitcoin. So as an internet native settlement layer, I think Bitcoin's in a really strong position. Don't expect, crazy price growth as the asset's market cap continues to expand, but expect really, really strong performance with much lower risk than we'd seen in the past. This thing is going to be structurally important to the new financial ecosystem, and it won't be going anywhere. If Tether has, 5% of its reserves in Bitcoin, and then at some point 10%, 30% of its reserves in Bitcoin, things really change. This becomes a structural financial layer. So I'm really excited for the future. Awesome, guys.
Hey guys. Hey, that's all. Hey, Dan, one last thing. David Marcus last year was at Strategy World. He presented. He was awesome. I spoke to him afterwards, and so he was there. I don't know if he's there this year. I would tell people, if you do go, yes, he was at Strategy World. If you go to Bitcoin True, our inside event at Strategy World, or if you go to Strategy World, you'll meet all of us at our event. But for Strategy World, if you look at the speakers there, if you are a little bit persistent, you can meet and talk to that person directly. No, they do not turn you away. In my case, if you want to meet Michael Saylor, come to Strategy World. I'm sure if you're there for a couple of days, you'll probably get to talk to him more than once or twice. Right.
Exactly.
I mean, you guys have been there with him, right? You guys have talked to him multiple times. So I would say come to that event, Wynn Hotel, in February of next year. Look forward to seeing you.
Awesome, guys. Until next week, everybody. Thanks again for watching. I know this was a lot of technical information. We'll be back on to another riffing next week. Talk soon. Bye.
Bye.
Bye.